Welcome. Today we're joined by Paul Murcutt, Senior Vice President at BFL Canada Realty, to discuss one of the hottest topics in Strata, tips to help with insurance costs. Hi, Paul.
Hi, Tom. Thanks for having me today.
Very glad to have you. Of course, for the last 5 years, insurance has been the talk of Strata. And today we're going to recap ways that proactive risk management might help. So, very glad to have you here for this.
Oh, no, awesome. Thank you. I think, as you mentioned, hot topic in the past. We're thankfully in a bit of a softer market today. So insurance premiums have been kind of stabilized or reducing. And now is almost the opportune time to start thinking about risk management and proactive measures at the property to help with that next hard market that will eventually come sooner or later.
Of course, of course. And none of these things happen instantly. They sometimes take time and effort. But before we get into it, maybe you can tell us a bit more about BFL.
Yeah, no, thanks, Tom. So, BFO is a national insurance brokerage spanning from coast to coast. We have about 1,500 employees and writing about 2.8 billion in insured premiums. Specifically for our real estate team, and that's the team that I sit on, we have around 250 people. We have a single program that serves condos and strata communities and syndicates in Quebec, right from coast to coast. So, been in the business for a long while, 30 plus years, and the program is pretty well known, and our goal is to be market leaders in each of the major urban centers. So that's us in a
Fantastic.
nutshell.
Thanks for that. And tell us a bit why proactive risk management matters.
Yeah, very good question. Now, I get this question a fair bit from different strata councils and condo boards from across the country. And a proactive management, lots of buildings are proactive, and they all want to know, why it matters and what's a tangible benefit for us if we go down that path of maintaining our properties. And so for me, there's three kind of key elements to it, and I've put these up on the screen here. So, first off, risk events. So risk events obviously impact your premiums and also your property values. And these types of risk events can include things such as water damage, fire claims, and weather-related incidents such as flood, hail, and wind. And when you start to take a closer look at these events, you start to understand what their importance is and how they relate to insurance. For example, water damage accounts for around 60 to 70% of all claims that stratas and condos see. So it represents a significant part of the insurance world. Fire claims, while they're less frequent, they represent a disproportionate share in the payouts. Fire claims are often a lot more expensive. And then weather events, so hail, wind, flooding. This as we look across the country, this gets a little more impactful, especially in Alberta, that sees a few of these risk events fairly frequently. We've started to see them increase in frequency and severity right across the country. And most of the top events that we've seen from Canada have been from weather-related incidents. So I think for me, that's the first reason proactive risk management matters. Secondly, proactive strategies can help reduce claims, improve insurability, and can also impact your property values, as I mentioned before. Go on, sorry, sense a question.
Oh, I was just thinking about how disruptive claims could actually be if you're forced due to a water event to vacate your property. So I was feeling that as well. It's not just about the money.
Absolutely. The impact on the community, the impact on people's livelihoods is significant. I've been through a water claim myself, and I'm not sure if you have, but the impact and the toll that it takes on human beings is significant. And all of a sudden you understand why you have insurance, I think, right? That's the one thing I learned through my claim was it all of a sudden pins the importance of insurance and what it means to have the right policies in place and what it means to have the right people helping guide you through that claim.
Absolutely. That is a great point. And obviously, when you are doing all of that, it requires the engagement of owners in these communities.
Absolutely, and that kind of leads to the last point there. It really does help build strong communities. Building a culture of risk management in communities helps bring people together. For example, I saw a building recently that had established a maintenance committee, and it really helped bond the residents. It was really unique to see, and what it also did was it helped build a better rapport between the residents and the Strata Council. So it really does help build those stronger communities.
It's interesting that that occurs. You hear about landscaping committees and social committees, but a maintenance committee, another great way to keep those owners that are engaged, that are concerned about maintenance and all of the small things that I think owners recognize and may not become priorities for either their council or for their manager. So that's a really clever idea.
Yeah, absolutely. I've seen some pretty unique committees, and when you have an effective committee, it really helps turn the dial, and it really helps to kind of take those main initiatives off the Strata Council, who have a big job of running the corporation, and so these different committees can really help some of those key initiatives move forward in a significant way.
I love it. That's a great observation and something I think we can pass to other stratas to take away. Talk to
Absolutely.
us about some of these key elements of a risk management program.
Yeah, absolutely. And I think, you know, a risk management program can be fairly comprehensive. I've seen risk management programs that are really in depth and really go into great detail. I've put three of the kind of the most important things I think up on here. But in addition to what we have on the screen, I think a depreciation report is something that should form part of a risk management program, because your depreciation report sets out the picture and the path forward on maintaining your property, making sure you have enough money to maintain your property. So I think a depreciation report, a well-funded property is a key element to it. But in addition to that, I've got up on here a structured checklist. So a structured checklist really helps ensure consistent inspections and maintenance across all the major building systems. And I think consistency is the key there. It is consistently having a similar kind of checklist, so you know what you're doing, you know what you need to check for, and it's almost second nature as you kind of work through the lifespan of a building. An example of that, some of the water damage checklist items I've just put up on the page there, they're typically what we might see on an average checklist. Secondly, here, incident reporting. So this is a critical part too, because this enables staff, residents, and contractors to make sure that they're reporting issues quickly and effectively, because lots of people have different styles of communication and different ways of doing things. But if there's a specific system and everyone knows how to use it, even if that's as simple as, you need to email Bob on Fridays because he's here, he's the building manager, but on Wednesdays it's Ted. It's having those plans in place and those processes in place so people know what to do. I think that's a critical part of a risk management program. And then finally there, the property management policy, I've seen some really, really effective property management policies that establish those clear protocols for handling emergencies, repairs, and preventative actions. So I think, a combination of those three kind of key elements really does it for me, as well as the depreciation report. But again, I've seen some pretty comprehensive risk management plans that go right into the details, right into the weeds. So, but I think this is a good place to start.
Agreed. I'm delighted to see that we're moving on to a maximum 5-year cycle for depreciation reports. We still see some from 2013, and some stratas that should have one don't appear to. And there's just no way in communities of that scale that you can keep on top of it without having that third party advise as to the useful life of assets and the maintenance that's going to be required to keep them in good health for as long as possible.
Yeah, absolutely. I think what's unique about the business that we write is we have a national lens. So we write buildings right across the country. And what we've noticed and what we've seen is a difference in how how buildings perform between, let's say, British Columbia and Ontario. in Ontario, a building is they're fully funded, so their depreciation reports are fully funded, so they have to make sure they're collecting enough strata fees to fully fund their depreciation report. Whereas in BC, there's not that requirement, and we see more claims. We see buildings have more claims because of that deferred maintenance that's essentially been allowed. So yeah, I'm looking forward to seeing some changes.
I was speaking about special levies a lot lately, and yeah, that resonates for sure with what we see in the data. There are some seasonal tips as well.
Yeah, absolutely. I think, risk management plan, seasonal and environmental tips definitely go hand in hand. I've put 4 kind of buckets together here, but there are a lot more, but we'd be here all day. So, first up, water damage. That's, as I mentioned before, the most frequent claim that we see in strata corporations and condo buildings. So really, when you look at tips on how to make sure that these are running as effectively as possible, we're looking at things like making sure that you're inspecting and maintaining drainage systems, sump pumps, and plumbing regularly. Encourage residents to report leaks immediately. I've seen it time and time again where we've had a claim reported and we've gone in and found mold, and there's been a slow leak that's happened over a series of time, and it's caused a whole lot of damage, whereas if it had been reported and mitigated at an early stage, it wouldn't have resulted in a claim. So I think encouragement for those residents to making sure that they're reporting issues is important. And then using sensors in high-risk areas to detect issues early. So, technology really has come a long way in the past 5 to 10 years, and we see a lot of water detection devices now and shut-off systems that can really help a building with water damage. We've seen it in a fairly significant way. And in fact, we have got a program at BFL whereby you are incentivized for installing these shut-off valves and water sensors, where you can get an insurance incentive for installing these devices. So not only does it save you a headache of having a loss, but you're also, the insurance community is now recognizing it and providing incentives to corporations that go through the process of doing it. So
that's fantastic. How does that work?
Yeah, so the basically it's a program we have at BFL. It's only historically been available for homeowners, personal policies, but we managed to get it on our Strata program and condo program across the country. And the Strata Corporation need to install water detection sensors and shut-off valves per unit. There needs to be a minimum of 75% of the units that have the detection systems installed, and they need to have ensure that there's monitoring from a third-party company, and that the installers have been vetted and pre-approved for the program. And once they do that, they're able to get up to a 10% discount off their insurance rates for our program. So finally, we're starting to see insurance companies recognize this proactive behavior, which I'm really happy about.
That's fantastic. And in a strata, 10% really adds up.
Absolutely. Now, what we do recognize is that in many cases, it won't cover the actual costs of the full cost of having these systems installed. But what it has done is it's been enough of a carrot, let's call it, to push some of these projects forward. And the buildings that have had them done, what we've seen is not only the rate discount that they're able to achieve, but also deductibles fall as well. And so when deductibles fall, the return on investment all of a sudden becomes a lot shorter because you're not having as many claims. You're able to save on the claims that you were having in the past. And so we had one downtown Vancouver that went through the process, and it was a fairly significant initial upfront cost, but they were able to get the full 10% from their property rates. And then through the discount of insurance deductible, they were able to get a return back on it between 3 and 5 years, which is pretty impressive when you think about the investment and what it's done.
That is fantastic, and that double whammy really does hit home for everyone that had their deductibles rise so much over the last 5 years, because your personal lines policy will be cheaper if you have a lower strata deductible. So it really can pay off in a multiple of different ways.
Yeah, yeah, absolutely. So yeah, finally we're starting to see the insurance community recognize this, and yeah, I think it's an evolving program. It's evolving technology. We're seeing advances in the technology all the time, and it's just great to see.
Fantastic.
But yeah, so moving on to the next bucket there. So fire and wildfire. So this is obviously this causes significant problems in wildfire areas. It's fairly significant in that you can lose actual whole corporations. And I don't know, our program has actually lost some buildings in the Jasper wildfires in Kelowna as well. So wildfire maintenance and preparation is really critical. But when you're looking at fire in the buildings, things like ensuring that the fire extinguishers, alarms, sprinkler systems are all inspected and functional. For wildfires, making sure that the vegetation has been cleared from the exterior of the property and flammable debris has been removed as well. And then develop and communicate evacuation plans to all occupants. I think this is a critical part too, because you can say that you're prepared, but until it actually happens, you're like, oh, what do we do? and people are running around. So I think constantly, at least annually, communicating with residents on what their evacuation plans are, what to do when there is an evacuation, who to contact on the insurance side, I think is a good tip to making sure you're prepared. And then next up, winter risk management. So as seasons start to change, there's different tips and preparation each of the properties can do. I put winter up here because it's probably the most significant one that we see as far as like a change goes. And when you're heading into winter, things such as stocking the de-icing materials nice and early. There's a few years back where we had the shortage and weren't able to buy salt. Everywhere was out from salt. So making sure that you've got those plans in place for those nice and early, and ensuring walkways and all the properties are cleared promptly. So making sure that you've got an up-to-date snow removal contract with a snow contractor. Use snow and ice checklists. Sorry, go on, Tom.
No, it goes beyond just having that snow clearing. We've
Oh,
had some really deep freezes over the past few years, and I know that caused problems for a lot of stratas.
absolutely, yeah. And we see it in Alberta and in the colder provinces a fair bit. And simple things as leaving your windows closed, especially when the temperature drops. It causes freezing pipes inside your property, and it cause significant damage. So yeah, it certainly does go beyond that. You're right. And then just making sure the heating systems are operational and the property maintained. These are things that the Strata Corporation should be doing anyway. But as you lead up to the winter season, it's probably good to get a check-in then with your contractors to make sure everything's working properly. And then last bucket here, so extreme weather readiness. So, everyone's seen, we talked a bit about it already. Everyone's seen the rainstorms. We have atmospheric rivers now, all sorts of weird and wonderful new weather events. Hail in Alberta is fairly significant, wind events. And so, just making sure that you do things such as securing the roofing and make sure there's window protection if you're in a hail area like you're in Alberta. More relevant to BC, reviewing earthquake protocols and emergency kits. I think that is something that lots of people do. I do myself. I have to remind myself to update it annually because it's something that can sit on a shelf, and hopefully it does sit on the shelf for many years.
We hope so, yeah.
Making sure, but
They've
making
talked about
sure
it
that it's
for so
updated.
long, though. Eventually,
Yeah.
you need to be ready.
That's right. Yeah. So working through, even with your family on a personal level, what that looks like, what happens in those situations, where's a meeting point, those type of things that that your busy life takes you away from, but become very important when actually you need
When something
to deal with
happens.
something. Yeah. Absolutely. And then, so yeah, finally here, I think the insurance cost benefits. So, it all ties back to, okay, Paul, this is great. We do all of these things. We're such a good strata corporation. What does that mean for me? How can I get some of those cost benefits back from our insurance providers? And it's something that's pretty difficult to put it's not tangible. But what a well-maintained property does do is, it enables your broker to make sure that they're getting the best premium and best deductibles available. We saw it at the last hard market. We had properties that were struggling to find the capacity they needed on the basis they didn't have that. They weren't well maintained. They had a history of claims. And so really making sure that their property is maintained, and you're communicating those changes to your broker so that your broker can make sure that they're providing that information to the insurance carriers. And a better property presents a well-maintained property presents a better risk profile for insurance companies. If you've got a well-maintained versus a not well-maintained, guess who's going to get the preferential treatment? So it's as simple as that sometimes. But in addition, it helps enhance your property values. Well-maintained property, people read minutes, they look through the meeting minutes to find out what's been going on at the property. And if they see that there's deferred maintenance and something that's not maintained, then that could put people off. And well-maintained properties typically have a higher property value. And then I guess lastly here, it helps reduce the overall operating costs. We've talked about some of the livelihood impact, and insurance claims are one thing, but the general operating costs of a claim in a building, it's significant. It takes a toll. You've got your managers working on it, you've got your building managers, you've got your strata councils, all taking time away of what they should be doing and focused on a claim. And so it can really help reduce those overall operating costs. And I guess if there's a final message I could leave here, it would be, well-maintained properties with a solid risk management practice experience fewer claims, and they help you get the best premium and deductibles in the marketplace.
Fantastic. Those are some really great takeaways. As you were speaking about deductibles, Paul, something came to mind because ACMO spoke recently on this issue out of Ontario, the Association of Condominium Managers. And they were saying that generally a condo shouldn't make a claim unless the loss was 2 or 3 times the size of their deductible because of the impact that it could have on their future coverage and other things. That is much higher than I would have thought. Maybe you can inform our audience. What is the impact of a claim, and is it worth making a claim for a loss that's barely more than the deductible?
Yeah, very good question. And it is something that we get quite a lot is, what are the impacts of this claim? What's it going to do to my premium? Am I going to have problems with insurance next year? And, I think it's so specific to one particular property that it's difficult to give a blanket answer, because, it could be that the property is in a hard to place region, such as, let's say, in the deep in the interior where it's it's a high wildfire rating, where there's fewer insurance companies anyway. And so, that could have an impact on it. So it does really vary from building to building as to what that answer is. But, your insurance policy is there to help respond to sudden and accidental loss. That's it, plain and simple. And each of the owners in the Strata Corporation have the ability to log a claim if it's over the deductible. One of the things that we do personally at BFL is we have a claims advisor team that work with the insured at the time of an incident. And what we do is we don't report a claim until it actually has received approval from the council or the property manager, and we've gone through the particulars of that claim. It could be $1,000 more than the deductible, and at that time there could be some other deciding factors that the Strata Corporation decide not to log a claim. But it's important that you get in the professional advice to be able to make that decision, and you're not just going in blindly and thinking, oh, it's because we're going to get increased premium. That might not necessarily be the case, and it could be that you need to log an insurance claim. So our team will help you do that, and whoever your broker is should be doing that for you.
Excellent. I know we do have some questions, so we'll go to those next. But it is worth having that discussion, I think, with your claims advisor, because a loss that's just barely more than your deductible may save you that $1,000 or $2,000, but it could have a bigger impact down the line on your policy terms than eating that. And it was a kind of interesting topic. So thanks for your expertise on that part, Paul. I'll just take a couple of questions now. So a lot of boards and property managers are struggling with aging infrastructure. What kinds of upgrades have the biggest impact on insurance costs?
Yeah, so that is definitely a problem that we've seen with aging property. We've got a lot of aging properties here in British Columbia where there's, old stock that needs to be maintained. And, when insurance companies look in on the types of upgrades that are needed, they really look at the four main building systems. So you're talking about the plumbing, the roofing, the heating, and the electrical. And so these four components of the building are what we see insurance companies asking questions about. And so when you're looking at those upgrades, the roof has a lifespan on it. So if it's coming up to that lifespan, it's like, okay, if it hasn't been replaced, what are the plans to replace it? What maintenance has happened with it up to that stage? Water systems, such as replacing old plumbing, if there's old plumbing in the property, or at least having a plan on what to do so you can articulate that to the insurance companies. But yeah, I think the four main building systems, so the roof, heating, plumbing, and electrical, are the four main categories that insurance companies look at.
Thank you. We talked a little bit about wildfires and floods and the impact of hail, especially in Alberta. What practical steps can be undertaken to help prepare?
Yeah, so I touched on this a bit with the slides. Wildfire, there's certain things that a corporation can do, such as clearing debris from around the perimeter of the property, making sure that you've got flammables off of the exterior of the property too. When you look at floods, you can elevate critical systems. So I know that's quite costly, but a lot of the the critical systems are sometimes in the parkade. So we've seen properties that have actually elevated them out of the parkade where there's a flooding risk to them. And then, from a hail perspective, in Alberta, we've seen a lot of properties move to the hail-resistant siding and window protection. We've seen lots of corporations start to go that route because it's just you don't know. Hail is one of those perils that's very unpredictable, and there's certain bands in certain regions that typically get hail, but it's very hard. It's very hard to underwrite.
Good tips. Good tips. Here's one that we didn't cover. Why is it so important for condo corporations to keep their property valuations up to date? And how does that affect insurance negotiations?
Yeah, absolutely. So this is a very important part to when a property is seeking their insurance. So not only is it legislated here and across the country too, so you're legislated to make sure that you're insuring to full replacement value, and there's no other way of ensuring your full replacement value than to get a third-party replacement cost appraisal. And once you do that, you remove any co-insurance problems, and co-insurance at a very high level is if you haven't insured your property to value and there's a claim, then the corporation could be on the hook for paying a certain percentage of that claim. You're co-insuring with the insurance company. And so we've seen corporations that have had to pay out, they haven't had the full payout of a claim because they hadn't insured to full replacement value. And so it's a very important part of a corporation's insurance process. And as well, I know at BFL we provide for properties that have had an appraisal from a third-party company. We provide them with something that's called extended replacement cost. So that's the insurance companies agree to give them additional 30% over and above the policy limit. So if you're insured for $10 million, you get an additional 30% on top of that. So $13 million you would get as opposed to 10, and you're only purchasing insurance for 10. So there's some significant benefits to having it done, and something that is critical for corporations to make sure that they're abiding by the Strata Property Act.
Amazing. I know it's quite difficult for this, and we touched on it earlier, but if a strata is taking steps to reduce risk, how can they make sure that the insurers are going to recognize and reward those efforts?
Yeah, and this is where the communication between either the property manager and the council and the broker is critical. We really want to make sure we're collecting that information, and our role is to make sure that we're portraying the property in the best light that we can. And so, we send out some really annoying questions at each of the renewals, asking for all the update information. And I know it's a bugbear for a lot of property managers and councils who are very busy people. But I think it's really important that you do let us know about those proactive initiatives so that we can make sure that we're getting the best rates for you. So I think it's really about communicating that with your broker and working with your broker and making sure that your broker is doing the best they can for your property's renewal.
That is fantastic. One last point. What is a preferred risk, and how does a strata find itself get there?
Mm-hmm. Yeah, I think a preferred risk is essentially one that's maintained. I think one that has everything that we've talked about today in place, all these proactive risk management strategies. If they've got any committees, like I mentioned, the maintenance committee, let us know about it. A preferred risk is one that would stand out when you've got a number of different risks. If you're an insurance company, not that we are, but if you're an insurance company and you've got a number of different risks on in front of you. If you've got one that's well maintained, has all these risk management strategies in place, all these committees, then you're going to stand out. You're going to be that preferred risk.
Fantastic. Everyone looking for more information, there's a QR code on your screen, or you can get in touch via bflcanada.ca. Paul, I'm grateful for you joining us today. Next week, I'm going to be joined by Kelly McFadden of Condominium Lending Group to discuss condo loans as an alternative to funding projects to special levies. Paul, thanks so much for your time today.
Thanks, Tom. Good afternoon, everyone.